there's very few, if any, other decisions that you make once financially that can have such a big impact on your financial situation.
Because once you elect,
yeah, I mean,
you're
so
done.
It's like you make that decision one time, and it's going to impact you financially for the next couple decades.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business. The advisors discuss some of our firm's investment processes. These are just a few of the many possible approaches to investing. Individual results may vary depending on your goals, risk tolerance, market conditions, and other personal factors. Please consult a qualified financial professional before implementing any investment strategy.
Welcome to the Market Moment. This is Matt here with Lee.
Good morning.
Caught you on your phone. Sorry. And Isaac.
Hello.
Today we're going to talk about one topic. So frequently asked question. We've been doing this for, 3, 4, 5 weeks now. I was just telling Zoe that I've really enjoyed having kind of that, starting with the frequently asked question, a topic or question that we just get on a regular basis, whether it's from listeners or here in the office with clients or prospective clients. So we're going to talk through that today and then get into something else that kind of hit the news recently and what that might mean for you. So the question of today that we're going to get into is, when should I claim or when should you claim Social Security benefits? This is for anyone, I would say definitely 60 plus, they're starting to think through what this looks like.
Trying to get those things in the mail.
Yeah. So they've seen their projections and, you can go look online and there's people that'll say like everyone, no matter what, should file at 62 because, and then there's, the opposite. Everyone should wait as long as possible because, so you see a lot of information out there. There's a lot of information on what you should or shouldn't do. A lot of it's really good, and I think you should digest all of that. But what makes the most sense for you? How should you go about calculating that? And we have a process for that. We have our financial planning software can help with that depending on your situation, your goals, objectives, trying to get as close as possible to kind of that optimal, age or starting period of when you should start. And before I kind of hand it off to you guys to run kind of through y'all's thoughts, ultimately what this comes down to and why this is quite literally an impossible question to answer is it is essentially exclusively a life expectancy calculation. Correct. Right? And so it's not knowing how long you're going to live. It makes it impossible to get it perfect. But that said, we often like to start with, at the very top, what is your health situation and your medical history? Because I've had countless situations where financially, like just looking at the numbers, it says, hey, you should wait as long as possible. But then you get into their personal health situation, medical history, family history, and it's like the opposite ends up being true because they just won't live very long. So that's something to keep in mind as we're talking through this is life expectancy is the driving force. The other factors are kind of after that. So anyways, what should somebody be thinking through? What should somebody be aware of when they're trying to help them answer the question of when they should start Social Security?
Yeah. I mean, I just kind of piggyback off what you said. Any software you put it in, if you do it on the back of a napkin, it's going to tell you to wait until 70. Yeah. Because it's going to assume you're going to live till 100. Right. The break even's usually somewhere between 80, 82, give or take.
Early 80s, yeah.
Early 80s. And that's the hardest part of a conversation is, well, if you plug everything into a software to ask, it's going to tell you to wait.
Yeah.
But then a bunch of factors come in. I like to look at, what kind of pressure is it putting on your investments to wait, right? When are you actually going to retire? Are you retiring at 62 or are you retiring at 65? Then people come in and ask, well, why don't I start it early and still work? Well, then they penalize you for that. Right. And so they reduce your benefit if you start it and you have earned income before full retirement age. And so those are some of the things that I'd kind of look at first is what kind of pressure does it put on your investments? Can your investments handle that kind of pressure? And if they can't, it might make sense to start it earlier to alleviate some of that pressure from the investment side.
I don't hear it as much, but one of the things that I mean, I think we all hear it from time to time, is it may not be around. I mean, that's been a concern. You know, I think, you know, almost every year there's that talk in Congress of,
It's like, get it while I can.
yeah. You know, and a lot of people's thoughts are, you know, I've paid in for the last 30, 40 years.
And it's a fair point.
I want to take it. I mean, because there is no guarantee. I think we can all sit around here and think the likelihood of Congress allowing it to go away, you know, that would be 435 people would be reelected. You know,
Yeah. The risk is not zero, but it's
I mean, it is a
close.
risk. And so I think that there is, when you balance, you know, what impact does it have on your current investments? You know, if you continue working, the tax or the penalty that the government puts on you, and, you know, that emotional feeling of it may not be around when I'm 80 years old.
Yeah.
All plays a factor. And then the other thing too, you get a pretty significant increase by waiting.
Yeah.
I mean, you know, one of the things I communicate to the people that I work with is, you know, when have you ever gotten a 7-8% raise at your job? Most people don't.
every year for as long as
That's
you're there.
correct. And Social Security, once you hit 62, until 70, you get an 8% increase in your monthly benefit. I mean, that's substantial increase. It's far and above over the cost of living adjustments. And so, I mean, there's a lot to factor into it. It is not a simple, 64, 65. You know, full retirement age for most people right now is 66 and 10 or 11 months.
Right.
It's not that simple.
No, it's not at all. A couple general rules I like to talk to, and like with just like any good financial planning software, you can adjust. So Isaac's correct. If you just go in and run the numbers, it's going to typically take you to like age 95, 100. And so it's going to say, well, wait till 70, because then your benefit's a lot larger, and you benefit from that for, 25, 30 years. What we'll do is, though, we'll adjust that life expectancy age if it needs to be. If a client's situation says, hey, like, I've had no one in my family, I've had all these issues, there's
Great point.
No way or very little chance I live past 85 or 80 or whatever it is. We'll adjust that so that the software and the calculations take that into consideration. And so there are ways to do that and do that well. One general rule of thumb that I tell people is, if you don't need it because you're still working, like, don't start it.
Yeah.
Right. You're going to be giving some of it back in the form of a penalty for having too much earned income. You're locking it in, so you're not getting the 7-8% roll up every year.
That's correct.
And so, because I get that question a lot of like, hey, I'm 63, 64, still going to work for another couple years. Should I go ahead and start it? I'm like, you don't need, like, we'll just be putting it into an investment account that we hope gets 7 or 8% a year, but like it may not.
Yeah.
And so, I think generally speaking, for a lot of people, if you're working, have income, and you can pay everything out of that income, just let your Social Security continue to grow and defer it.
The tricky part, is when we have clients, and we have a fair amount of clients that want to retire even before 62. So then you're thinking, okay, investments have got to support that until you get to 62, at which time you can, put Social Security into place. And so, I mean, there are a lot of factors. It is not as simple as I can get it at 62.
And then there's the planning around, like, when you have spouses.
Yeah.
And, both spouses have worked, and one benefit is a lot higher than the others.
Yeah,
like,
great point.
Do you weight the same, and is there an age difference, or are you the same age? Whose do you start first? Do you start them at the same time? There's a lot of, planning that goes into that. If typically, and y'all correct me if you think different, think otherwise, but typically what I've said, because that increase is a percentage increase, and the surviving benefit for either spouse is the larger of the two benefits. Yeah. It typically, in my opinion, makes sense to defer the larger benefit longer.
Correct.
Right?
Yes.
You're benefiting from the 7-8% increase. Whoever lives longer is going to benefit from that, for a longer period of time. And so if you're going to not start them at the same time, start the smaller benefit first.
That is
It's
correct.
kind of another, rule of thumb.
But again, the importance of a planner,
Yes.
of plugging it into software and then playing with the numbers. Yeah, but you know, Matt, you said this earlier, and I think that fact goes overlooked is, you know, if you have a history of, you know, everybody in your family, nobody has lived past the age of 75 or 80. Well, it may not make sense
Yeah,
to
let's wait to 70.
wait to 70. And
Yeah.
so, you know, those are the questions that a good financial planner will ask. They'll ask those probing questions to really dig into what's specific to your case.
There's very few, if any, other decisions that you make once financially that can have such a big impact on your financial situation.
Because once you elect,
Yeah, I mean,
Yeah.
You're
so
done.
It's like you make that decision one time, and it's going to impact you financially for
Sure.
the next couple decades. And
Yes.
hopefully, it's not like make or break. For some people, it is. But it's an important decision and one that you want to be thinking about ahead of time and not, you know, at the last minute
that's correct.
scrambling to make a decision. So, any other thoughts or comments on
No,
Social
I mean,
No, that's
Security?
great.
It's a great question.
It's definitely something that you can mess up, to your point. So getting some advice on that is something that I can't recommend enough.
Yeah.
Making sure you're making the right decision, and I mean there's a cost of living adjustment on it, so even when you turn it on, it goes up. But I think if you talk to somebody on Social Security right now and you ask them to compare the cost of things when they were in their 30s or their 40s to now, it's significant. And so
Oh, sure.
So just seeing a number, it's like, oh, I can turn on at 62 and it's going to be this. It's like, well, people are living so long nowadays.
Right.
To the opposite of your point, like you may need as much as possible because you
Right.
may end up being 90. It's like, well, I turned it on at $2,200 a month, and now that's not getting me very far.
Right.
Yeah,
So,
Right.
anyways,
Yeah.
a lot to think about.
for sure. Okay, so the other thing we wanted to talk through was Trump recently, I think just this weekend or
I think it was yesterday.
Yesterday put out the idea of changing the reporting requirements for publicly traded companies from quarterly to twice a year. So that, and then a secondary question that I'm going to get into here in a second. So what are your initial, like when you saw that, initial reactions? Not right or wrong, but just kind of
Yeah.
what was your first thought?
The first thing when I saw it was I didn't like it.
Okay.
I was very much like, well, we've always done it this way. Like
Yeah.
companies are built quarterly. I mean, even here we talk about quarterly business,
Yeah.
right? Everything's in that flow. If you dividing 12 by 4 is super easy, right? It's just like our entire calendar is kind of based on it. And then you think about, what actually gets done in 3 months and how much things change. And, I've never been on the corporate side of putting books together for a financial report, but I imagine it's not something that just is a click of a button.
Yeah.
There's a lot of man hours going into this, and they probably start, a month after they just put out the last one.
Right.
So I've convinced myself that I can see it being a positive to swap.
Mr. Mackey?
I'm similar to Isaac.
Yeah.
I think his proposal, it makes some sense from a cost cutting standpoint to, some companies probably fall victim to, they're just managing to meet that quarterly bogey, whatever that is.
Yeah.
And, part of his rationale was making these companies be more long-term focused rather than 3-month focused.
Yeah.
And so I agree with that. When you talk about transparency, the transparency would still be there. It just wouldn't be as often. Part of me wants to think, well, what could go wrong in an additional 3 months? We don't know until something really bad, could happen. So, I think at least on first glance, I'm probably in favor of it.
I first saw it, my first reaction was like, I love it.
Yeah.
Okay, that was my gut reaction. Because I just think there's too much out there a lot of times. And I think in a weird way, like less is more in these kinds of situations where it's like people don't need to be now. If you're a day trader or you're
Sure,
trading
sure.
constantly, like this idea sucks.
Yeah.
Like you want as much information as humanly possible. But if you're more of a long-term investor of like, hey, we're going to make investments, you're going to allocate them, hold them for a period of time. I think the more information you have just makes you second guess and think on a more regular basis, and that's not always a good thing. You know,
I sometimes think about it in the reverse, that if we had always done semi-annual reporting and then somebody was proposing quarterly, I might think, why?
Well,
You
yeah.
know, why do we need information that often? You know, and so, you know, we kind of related it before we started recording to, you know, oftentimes we fall victim, even in our business, of meeting with clients often, you know, sometimes too often. And there have been times when clients have come into my office and they were in the office 3 months earlier. They're long-term investors and
like nothing's changed.
nothing's changed.
Yeah.
Their objectives haven't changed. The portfolios haven't changed. All we're really talking about is performance. And if we're long-term investors, you know, that's part of, you don't dwell on performance on a quarterly basis. So I can see where sometimes too much information, you know, is too much.
If this does happen, and I don't think it will, at least not for a very long time, but that first 6-month waiting period, when the earnings drop on some of these larger companies, people are going to freak out. Just because if
Stocks only go up.
that's true. Long term over
Kidding.
time.
That's not
That
true.
was a joke for compliance. That is a joke.
No,
But like if something goes up, you know, 2 cents earnings per share in every quarter, and then it's like a 4-cent jump, like I feel like psychologically people are gonna put too much weight on that.
I definitely
They're not
think
gonna
it
adjust.
introduces some new dynamics in the market and the way stocks move, and when they move, for sure.
Do you think there will be decreased volatility in the time in between?
Possibly.
Like it'll even
I don't know.
out?
I don't know. I need to talk to someone smarter than myself.
But you know,
I think I could make the argument that there would be less, and I could make the argument that there would be more.
Or it might be greater volatility at the semi-annual period. But one thing I was just reading on here is that just because the SEC says it's no longer required, doesn't mean that companies don't go ahead and continue to give some type of quarterly
Well, that was
reporting
my
to
next
shareholders.
question. It's like, what is there an in between where like there's a twice a year reporting requirement that is kind of the current standard,
Sure.
and then there's on the intra quarters in between those where it's like they have to report something. It's just not quite as burdensome,
Yeah.
and where
Or they could just send it to shareholders. I mean, they could just send it to the people that own their stock. Go ahead.
I was going to say, this conversation reminded me of Netflix last year said they were going to stop putting their subscriber count on their earnings, and everybody freaked out.
Yeah.
They thought they were like hiding something, anything like that. And then,
Yes.
they did that early 2025, and everything stock's still moving.
Yeah.
There was a little bit of short term, like, this is weird. We've always done this the same way. And then everything kind of got back to normal.
This
So,
is
too
a
much
proposal
information.
that I think I can't remember who said it, Isaac, maybe you, that you didn't think it would happen for a while.
Yeah.
I kind of take the opposite. I think this is one that you could see get some traction. Yeah. I don't know why I feel like it, but I feel like with the SEC, the current makeup, I think this could be something that we see come down the pike in the next year or so.
Yeah. I mean, something else that we talked about kind of before we went live was the 24-hour open market, right? A 24-hour trading day, or 22 we talked about. So similar to that, like, do you see that coming in the near future?
Yes.
The far future?
I think that's coming in the near future. I hate everything about it, and I don't think it's good.
I don't think it's good at all.
On one of my trips to New York, we were fortunate to be able to have a meeting with the president of the New York Stock Exchange, and somebody asked her what's priority number one. That was it, and it wasn't if, it was when. It's coming. It will be a 22-hour trading day. Now, and somebody said, well, are you going to have an opening bell and a closing bell? And she said that they would still probably have that more for symbolic reasons.
Yeah.
trading would not be the same at 4 a.m. as it is at 10 a.m., but you'd still be able to trade. And so,
This is so.
there were questions.
So dumb.
And part of it is that it's such a global economy, and that 40-50% of trading that occurs in the U.S. is international. And so there were so many questions brought up by people in the audience of like, well, what does that mean for the advisor? Are there retail advisors that have hours between 3 p.m. Central Time and 4 a.m. The next morning? And she kind of hedged on that, but then the group we were with basically said that they would provide some sort of personnel to handle trading.
Wow.
And then there's so many questions of like, if you have an advisory relationship and then you see something on the 10 o'clock news or there's breaking news at 11 p.m., how many sell orders are coming in while the advisor's asleep?
Yeah.
And so it creates.
I would love to have, and I genuinely mean that, I would love for someone to educate me on like the potential benefits of this.
Yeah.
Like what good would or could or will come from this, because I'm blind to it. I just don't like it. It almost makes me mad.
Matt likes his sleep.
Well, it's 24, 22, 24 hours a day, 7 days a week. It's like, no, like you can't buy a house at midnight because the bank and the trust company's not going to wire funds at midnight. You can do it the next morning. Like we don't need to be able to do transactions and buy and sell stuff at all times of the day. I don't see the value of that.
One of the things, and I've never fully understood aftermarket trading. Okay.
Yeah.
But somebody is trading at 3:30 and at 4 and at 4. I mean, somebody is buying something when the average retail investor is not. I think that is prompting this to happen more quickly from a transparency standpoint.
But there
I'm
would
like
be
you.
so many other ways to do that. Like
I don't disagree.
Extend the
Extend
market,
it, yeah.
or shut off aftermarket trading. You know, it's like I don't care who you are, you can't trade after a certain to say that hey, trading never stops ever. I just don't see how that or why that would be the appropriate answer.
Well, somebody did ask her that question was, well, then why don't you just have 24/7? And she said something to the effect of, you have to have a time period where you reset computers and so forth.
Yeah.
And so, that's why most people think there's going to be 22 hours and there's going to be a couple hours.
One of the best parts of our current market structure that makes it tick, that creates a certain level of confidence, is that we have natural market circuits, breakers built in at the end of closing every day, on the weekend. It gives everybody a chance to say, what, this last week was a rough week. Here's let's spend the weekend.
You get a chance to process, digest information.
And then you come into the next week and you're like, okay, a lot of times it's, last week wasn't as bad as we thought it was. Right. And then like, how much are you, making those? Yeah, it's just, I don't get it. Someone please reach out and educate me on why you think this is a good idea.
Be careful what you ask for.
Well, I'm not saying I'll agree with them.
The question I had was, what does this do to the futures market? If the market's always open,
what need
is there a need for futures?
Well, it feels like this is kind of a secondary effect of how popular crypto's gotten, because crypto's been 24/7 since it's been around, and it'd be hard to call that a fully functioning market. It has its cons because of that.
I really do think what is driving this is the global nature of the market. I mean, we're open between 8:30 and 3 p.m. Central Time. You have, European markets that are open right now that will close at 10:30 this morning. Then you have the Asian markets that are open while we're sleeping. And so I think
everybody going to go?
I don't know.
You know what's funny is
I don't know.
We just have to.
Because then it doesn't make sense.
I bet you the answer is yes.
We have to think through the bigger picture, because the reality of this publicly traded company, if your stock's trading 24/7, that's going to impact not only your shareholders but your actual employees from time to time, right?
Sure.
Certain events happen over the weekend. Stock price is doing X, Y, Z. Like, you got to have people on the ground ready to do things, make decisions, whether it's your communications team, and all of this is happening at the same time where you can go out and look at like people, a lot of validity to like saying, hey, we work too much. Like people need to turn things off, like get away from work. The 4-day work week has gained traction recently, right? Flexibility. And it's like, this is going the opposite direction, not just for investors, but for like the people that work at these companies. Like that none of this is going to help with that. So like you want a 4-hour work week, like by all means, don't do 24/7 trading.
Yeah.
Right?
Yeah. No, and
it'll be interesting.
To our previous topic, like, could you imagine, right now people do earnings at close, and that it's just earnings at noon.
Yeah.
And like, do what you want with this information.
Yeah.
Like it'd be interesting.
It will be.
It'd be hard to not have that time to digest
Apple's
things.
going to be like, hey, we're going to report our earnings Sunday morning at 3 a.m.
Yeah. We're just going to send it to everybody's iPhone.
Yeah.
We're not even going to report.
On Christmas morning, everybody just puts them out.
We've probably raised more questions than certainly
I don't have
we've
any
answered.
of the answers. And I'm sure when you dig into the very fine details, there are unique situations and circumstances where it's like, hey,
somebody thinks it's a good idea.
This is why that's a good thing.
And I would like to think that it's not just about revenue and money. I mean, the NYSE is part of a publicly traded company, so
more trades is better for them.
Yes.
Yeah.
Yes. You can't overlook that.
And I can see the crypto conversation's like, well, we've done it with crypto and it's gone up and that it's not broke. You could make argument that maybe it is, but
there's avenues of it that are very broke.
Yeah. And but I think
girl coin.
You're going to get some of those people saying, "Well, we can trade this 24/7. Like, why can't we trade these?" And it's like, just be careful what you ask for.
Yeah,
right. I
absolutely.
mean, you have to remember these are companies that have employees, revenue, business models, goals, plans. Like, it's not just an it's not crypto, right? Like very different.
It is a very different thing.
And a company's stock price impacts the company in very direct ways, right?
Sure.
And so crypto going down by a lot impacts the investors.
Yeah.
Stock prices going down a lot impacts the investors, but also impacts like the actual company and what they can do, on a go-forward basis. So, anyways, I'll shut up. But
that was good.
That was great.
It's good.
Good to talk to. It'll be super interesting to see where we go on both the quarterly, twice-a-year reporting requirements, and then the longer hours for trading.
All right. Go ahead.
No, go.
Oh, quick poll. 15 seconds. Quick poll. Fed, 25 or 50 basis point cut tomorrow?
25.
25.
Okay, 25.
Let me check the odds.
It's 100%.
Josh Brown had a good Compounded Friends. It wasn't Compounded Friends, but it was one of his little bits. He interviewed, I forget who it was, big data guy. But he basically put out the Fed doesn't want to do 50 because every time they start with 50, it's not good.
Yeah.
And so,
and
unless they feel like things are truly as bad enough to justify and absolutely need 50, then I think it's 25.
I think 25 tomorrow, and I think we get 2 more cuts now by the end of the year.
I'd say 4% chance of 50.
Yeah,
you would say that
96% chance of 25.
Okay,
that's what the odds say.
Yeah, it'll be 25.
Yeah, so we'll know soon. Well, as always, we appreciate you guys watching and listening. Give us a like, subscribe, comment, share your thoughts. And please don't everybody reach out to me about their thoughts on 24/7 trading.
No, and if you have a trade you want to place at 3 a.m., Matt's phone number is.
No, but we appreciate you guys, and we look forward to seeing you next week.
Have a great week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com.